Well, the official cash rate has just been announced by the Reserve Bank of New Zealand on Thursday morning, and what was widely expected by the market, there was no change from the previous rate of 2.5%. But there was a bit of a surprise with some of the messages that was included by the Reserve Bank. They continue to say that economic growth is looking fairly muted at the moment, but also inflationary pressures, while they did spike over the last quarter, remain fairly under control on an annual basis. For this reason, they've given a pretty clear indication to me that the official cash rate will stay low for a fairly long period of time now. So for this, I'm sticking to my guns and predicting that short-term interest rates will stay low right through this year, although they may start to pick up at the early part of 2012. Looking at some of the international markets, and we've actually seen a pretty strong day of trading, particularly out of the US market. And this comes despite the fact that we've seen most of the central banks around the world over the past 24 hours providing some pretty downbeat messages. Here in New Zealand, of course, the Reserve Bank, I think, were pretty downbeat. But also over in the US Federal Reserve have given a good indication that they're going to continue to support the US economy, but also keep their interest rates pretty low for an extended period of time. Over the past day, we have seen the US dollar fairly weak. And for this reason, and for the reason that we've seen the US Fed, it's likely that it's going to stay weak for a period of time. The Kiwi seems to be well supported, over 80 cents at the moment. Well, over the past week, global dairy commodity prices have remained fairly stable and remain very strong at levels that we have been seeing over the past week or two. One of the key things to watch in my eyes will be some of the developments that are coming out of the major producing nations, particularly out of the US market. Over the past month, we've seen an increase in production, and over the first 3 months of 2011, US production has actually increased by 2% on year-ago levels. Now, this means that there is likely to be more product become available on the international market, as the US will now be exporting more. This could have some consequences on the international market, so I will be watching this dynamic pretty closely. The other thing to watch is any change in ethanol policy, and this could have an effect on corn prices, seeing them slip a little bit and providing more impetus for livestock producers to produce a little bit more. I'm still sticking by the fact that we're going to see a payout in excess of $7 for next year, but there's a couple of dynamics that we will be watching fairly closely over coming months.